Hello, my crypto juggernauts. Welcome to another short episode in Mx3. We're just going to be talking about some quick stuff that's on the news today and just giving you certain updates and details in the crypto universe. First of all, I know it's been a very bloody bear market, and I know people are going through it and all that, but just remember that, you got into it because you believe that this was going to be a different financial avenue, which is different from a lot of the already established things. And you got in it because you chose certain crypto that you believe that had the right technology, had the right community, had the right code, had the right you know developments for you to invest in. And so keep that up. If the cryptocurrency you're investing in is providing you that, keep that up and huddle and, buy some more into it if you believe it's a good crypto. And let's wait for this bear market to pass away, and let's wait for the bull market to come back, and let's see what happens then. Because at the end of the day, these things all operate in cycles. These things operate in cycles. It's not a linear catastrophic event. It's a cyclic event, and it comes around just like the solar eclipse comes around. So does the bear and bull markets. All right, let's get into some news. Yeah, so I wanted to go into this article real quick and talk more about what's going on with this stable coins and especially Tether. So crypto prices are plummeting. A so-called stable coin lost all of its value in a matter of days. A newfangled crypto bank halted withdrawals, and investors have been plunged into financial ruin. Now, the crypto industry is grappling with an even grimmer prospect. The worst may be yet to come. Ooh, okay, let's find out what that is. Concern is mounting over another potential vulnerability in the crypto market. Tether, a company whose namesake currency is a linchpin of crypto trading worldwide, long one of the most scrutinized companies in the industry, Tether is facing heightened pressure from regulators, investors, economists, and growing legions of skeptics who argue it could be another domino to fall in an even bigger crash. All right. Quote, Tether is really the lifeblood of the crypto ecosystem, said Hillary Allen, a financial expert at American University. If it imploded, okay, then the entire facade falls down. Okay, Tether is the dominant issuer of stablecoins, a type of cryptocurrency pegged to a stable asset like the US dollar. Unlike traditional cryptocurrencies such as Bitcoin and Ether, whose monetary value can fluctuate widely, stablecoins are typically designed to maintain a constant price of $1 and are backed by large reserve of funds or other financial engineering. That consistency allows crypto traders to conduct safe, predictable transactions without relying on banks or other financial gatekeepers. But many of these coins are stable in name only. Last month, when cryptocurrencies melted down, the crash was triggered partly by the failure of Terra USD, a stable coin with a $1 peg that was algorithmically linked to a sister cryptocurrency called Luna. When the price of Luna plummeted, Terra USD also fell, creating a death spiral that shook the broader market. By contrast, Terra claims its stablecoins are backed by cash. Interesting. And other traditional assets, making its reserves essential to health of the crypto. In theory, anyone who wants to exchange Tether for US dollars can do so quickly and easily. But the company's financial statements show that a significant portion of its reserves are tied up in unsecured corporate debt known as commercial paper. Such financial instruments are riskier and harder to quickly convert into cash, especially during financial turmoil. In 2021, New York's Attorney General fined Tether $18.5 million and said the company had lied about its reserves, calling it a stablecoin without stability. Critics say Tether essentially acts as a loosely regulated bank. Traders hand over millions of dollars in return and receive millions of stablecoins, which they use to bet more volatile cryptos such as Bitcoin or Dogecoin. Tether currently has 70 billion coins in circulation, making it more than 3 times the size of Terra USD before the crash. In a worst case scenario, critics say a downturn could spark the crypto equivalent of a bank run. Traders might all rush to exchange their tethers for dollars only to discover that Tether could not fulfill those orders. Investors would lose billions of dollars, forcing them to sell their other crypto holdings, causing a potential devastating panic that might spill into non-crypto markets. Tether got a taste of that scenario last month as cryptocurrencies plummeted. A flood of investors asked to exchange their Tether for dollars, forcing the company to pay out about an eighth of its reserves, or $10 billion, over the course of a week and a half on cryptocurrency exchanges. Tether briefly wavered from its $1 peg. Ultimately, the company said it met the demand. Tether went on a victory lap, proclaiming that it weathered the crisis flawlessly. The crash was the best story that could have happened to Tether. Paulo or Doni or D, Paulo A, the company's chief technology officer, said in an interview. Sorry, I'm very bad with names. We're not fooling around, and we take risk management extremely seriously. Then on Sunday, the crypto bank Celsius network announced it was halting withdrawals, causing digital currency prices to crash again. Tether had invested in Celsius in 2020 and lent it about $1 billion in tethers, according to Bloomberg, $1 billion in Tether, according to Bloomberg News. The company said this week that it currently had zero exposure to Celsius apart from a small investment. Still, as the market reeled, investors pulled out about 1.6 billion from Tether. More skeptics are speaking up. Last month, a top US bank officially called for new rules governing the Tether and its competitors, saying the Terra USD crash highlighted the risk of loosely regulated stablecoins. Some traders are now putting their funds into alternate stablecoins amid fears that the next crash could test whether Tether has adequate reserves. Now, I know this article is just going to keep going in a tangent about Tether and, just the risk factors involved. And yes, I will admit that there's a lot of risk factors involved in Tether. And in any type of financial industry, there's a lot of risk factors involved, and you should only invest an amount of money that you're willing to risk or you're willing to lose in these type of cases concerning with the crypto that you're involved in. And once again, this is not financial advice of any form. This is just educational entertainment. But just judging from the way things have gone, you know, I am more of a USDC fan than a Tether fan, because just for this very reason about how Tether is backed. There's this, just because of just the news and the information about how Tether is backed, I can't really support Tether as much as I would USDC or possibly the DAI stablecoin, because those are actually backed by reserved within the I believe USDC was with Coinbase and stuff like that. So just always stay alert, stay vigilant, do the research. The research helps. Do the research and see who these guys are, see their track record that you're trying to invest in and stuff like that. And try to have your money in not just one thing in case one thing crashes, and try to have it in many things. But concerning the stable coin, for example, just you want probably to use USDC than Tether, in my humble opinion, which is not financial advice. So these are just some of the things that are going on in the market. You just want to stay vigilant, stay careful. At the end of the day, concerning the Celsius thing, look, guys, not if you don't own the wallet and somebody else is taking a custodial or any type of custodial properties within the wallet, then it's probably not yours. If you don't own the keys to your crypto and that you can do as you please, and you don't own the keys and somebody else can freeze the account or stop withdrawals, or there's another custody or custodial value of the account, then it's not really your crypto at the end of the day. So that's why the phrase in crypto, not your keys, not your coins, is very prevalent. And you guys should stay very vigilant about those type of things. So this is just one article I wanted to talk about. If you have any questions about this article, please drop them in the comment section. I'm willing to answer those questions. Once again, please hit the likes button, hit the subscribe if you haven't already subscribed. And it was a pleasure disseminating this information. And I'll continue to do more shorts like this, reading articles and stuff like that with the rest of the guys, and keep up to date on that. Thank you. Peace and love.